Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's Insights into Insurance with Americana Insurance's Tom Sorensen. And Tom, an interesting show, I'm just going to say, you have lined up for us today. No listener email, but we have a friend on the phone you're going to introduce.
Yes, it's a friend of mine, a business acquaintance, and I hate to say this, but a Green Bay Packers owner.
Uh-oh.
Yeah. So I should probably cut it off right there. Huh? So anyway, but the reason why I got this gentleman on the phone and doing this radio show today is because, well, we started Harvest, and many guys, where I was hoping that we were going to be catching the farmers in their combines, tractors, semi-trucks, pickups for this show. Might not be quite that today, but you know what? They're still got harvest on their mind and what's going on with the market and crop insurance and all that good stuff. So I got Rich Morrison on the phone. And Rich, why don't you tell me who you are?
Well, I'm a risk analyst with Diversified Services Marketing Group. I'm out of Western Illinois, but I travel around the country, talk a lot about markets and risk management in general. And this time of the year, not too busy because producers are all in the field, but usually. So we're still trying to analyze markets and try to figure out what we think we can do, not only for 17, but then on into 2018.
Yeah, and something that he offers an email for our clients to every day of what is going on in the market, what did the markets do today. Also, he gives a phone call out every day, marketing phone call, and then he actually has a monthly
third Thursday marketing meeting.
Third Thursday marketing meeting. Does that last usually, is it an hour, Rich? Or?
About an hour long, yes.
Yeah, and really goes in depth on the grain marketing and those type of topics. So, Rich, question out there that I hear a lot about is, what's the harvest look like for, well, storage space and the transportation? Is there issues out there?
Well, we're seeing a lot of issues, especially in the southern parts of the Corn Belt already, and it really started back in late summer. We knew ahead of time that our stock situation this year was growing. We knew we were going to carry over roughly 2.3 billion bushels of corn and roughly 300 to 400 million bushels of soybeans coming into this harvest, and so we really started to see a lot of that move off the farm in middle of August, all the way into September as people started cleaning out bins. So I think there were parts of the Corn Belt that saw a mini harvest take place in August, just people emptying the bins. So that really kind of got things started here with a lot of movement of grain, a lot of folks, a lot of the commercial elevators filling ground piles because there was such a large carry built into our markets that they could afford to hold it. When you look at stocks here at the end of and last week on Friday we had a stocks report which told us the end of the year stocks. Corn ending stocks at nearly 2.3 billion bushels, the highest since 1988. The soybean stocks, the largest in 10 years. So that's kind of what we're dealing with as we get ready to start harvest, is the fact that we've got such a large carryover from last year, and we're seeing that tax the transportation system in some areas. We've seen certainly the lower Mississippi River, the Ohio River, even moving up into the mid-Miss. Barge freight rates have been astronomical already. Some of that's due to demand for transportation. Some of it's been due to low water on the rivers. So we've got a lot of things that are compounding right now, and it's really affecting basis levels. And I think that with barge freight like it is, it's going to spill back into the interior as well. Rail rates are probably going to be high through harvest. Ethanol plants, ought to be able to buy all the grain they can, so I would imagine they're going to be fading basis levels here as we get into harvest as well. So I think it's going to be an issue we're going to have to deal with all the way through, and consequently the way to deal with that is space. And
right.
If producers have storage space, they should be okay. If they don't have storage space, then we're going to have to really be looking, find that space now. Don't get caught into the second half of harvest trying to find an elevator that has a lot of room. So I think that's going to be a big difficulty here this fall.
Yeah, well, it's kind of funny that we started with this question, and I actually, I'll bring in the crop insurance effect of this is I always, every fall, make phone calls to my farmers just saying, hey, Hope you have a great harvest. But then I also ask them, hey, do you have any leftover grain? And normally this time of year, the reason why I ask them that is because they need a pre-harvest grain measurement of old grain so that it doesn't affect their crop insurance for what they do harvest. Okay. And so whenever every year I do that, I would say on the average it's maybe 1 out of 10 farmers that need that done. I would guess this year it's probably 4 out of 10. So just so you know, there's grain out in those bins yet too. Even though that they did bring them in August, there's still a bunch still there in the bins too, which I guess that's probably not a good sign for the market. Would you agree?
I would definitely agree with that. I think that's keeping some pressure on the futures market. Of course, I mentioned basis earlier, keeping a lot of pressure on basis. That stocks report last Friday kind of showed us some of the real numbers. The Minnesota carryover from last year, our stocks in the state of Minnesota are up almost 65 million bushels from a year ago. About 41 million of that's in elevators, 24 million of that's on the farm. So
Okay.
those are the bins that you're talking about.
That's the bins that I'm talking about
Yes,
then. Okay, yep.
Iowa's got an extra 20 million on farm. Illinois, an extra 20 million. North Dakota has an extra 41 million bushels being stored on farm, more than they had a year ago coming into fall. So, yeah, we've got a lot of corn on the farm still as we start the year.
Yeah. So locally, I mean, obviously the soybean market and the corn market is the interest around here. So where do you see the soybean market going to be at?
Well, soybeans have probably been the crop that's had the most optimism here of late. Most of that's driven by very strong export demand. We saw exports be strong all the way through the summer. Normally we would see some of that demand shifting to South America, but the fact that China continued to buy U.S. beans really even all the way up into the last couple of weeks has been a good sign, and we saw our old crop ending stocks at the end of the year at 301 million bushels. Now that's a 10-year high, but it is down about 100 million from where we had been just a couple of months back. So we've seen good demand, and that's been the big positive factor for the soybean market. The negative is that we still are at a 10-year high on stocks, and that we're looking at another probably a record soybean crop coming out of the field here this fall. So we got some good and bad. We need demand to be strong, and it is, but we've finally got to a point where we've outproduced that growth in demand, it looks like, and the government's projecting ending stocks next fall to be the highest we've had since 10 years ago, somewhere 400 to 500 million bushels. And that's kind of what we're dealing with here. So I think that's going to kind of keep a lid on the market. But on the other hand, good demand should keep a floor under it as well.
That's a little bit of positive on the soybeans. How about the corn? Is it as positive, or what's that looking like?
The corn, the only positives I think we have are feed demand and ethanol demand still look to be posting record usages again here for 2017-18. The big negative has been on the export side of things. We are, at least according to USDA, we're going to export 400 to 500 million less bushels of corn this coming year. Export sales so far year to date for the 17-18 year running 27% below a year ago. So you would think that cheap prices would be stimulating more export demand, but it just hasn't happened yet. We really need to have that happen. Some of that can be driven by the U.S. dollar. The dollar has weakened over the last 8-9 months, but it's started to strengthen a little bit lately, and I think that's kind of keeping some of these export sales in check. The big factor I've been telling folks, I think we've got more volatility in basis levels in corn than we do in futures market price. I think futures are going to stay pretty range-bound like they have. I would really look for a 350 to 370 price on through the winter months and nearby futures. So I really don't see that market going too wild, but I think basis levels are going to be where we have either our opportunity or our pitfall, and certainly the best way to merchandise basis is to have storage space available again. So if you've got space, one of the things I'm telling folks, don't be looking at December and March futures price. Be looking at what you can sell July futures or even maybe September of 18 because there's some huge, huge carries in the market out there.
Okay, well, great. Paul's giving me the break signal. We'll take a 30-second break and come back, and then we'll talk about crop insurance and the harvest price being started and settled.
Sounds good. We'll be back with more insights into insurance with Americana Insurance's Tom Sorensen and our special guest, Rich Morrison.
Nationwide is on your side. You have a side that is retired, playing tag and getting tired. A side that owns your own store. Looks like you need to expand some more. That's why there's a Nationwide to help protect and grow your many sides. Nationwide is on your side.
Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio.
For all your many sides, there's Nationwide. Call Americana Insurance Group in Albert Lea and Wells today.
And we're back here with more insights into insurance with Americana Insurance's Tom Sorensen. Joining us on the phone today is Rich Morrison. And Rich has already talked a little bit about some storage space and transportation issues we're starting to see, the soybean and corn markets. Tom, I think you mentioned something about crop insurance for that break.
Yeah, well, and we're insights into insurance, so we need to talk a little bit about insurance here. Being started and prices being what I would say set is what we call a harvest price, and Rich is up on this topic. So, Rich, what do you think on the harvest price? What's going on, and how has it started?
We've just got a few days under our belt. We'll use the entire month of October to set those averages, but so far we're averaging around $3.50 a bushel on December corn this month. That's down almost 12% from where our base price was set back in the spring at $3.96. Soybean average running about $9.57. That's only about 6% below where our base price was set at $10.19 back in the spring. So what both of those means, depending on your coverage level, if we have a bit of a drop in bushels along with this drop in price, we could see some indemnity payments for some folks with a revenue loss, again, depending on your coverage level. What we tell folks, if the market were to drop further this month, you've essentially got some protection on price in the form of this crop insurance put option, at least until the end of October. Once October's over, then that crop insurance put option expires, and so then we've got to manage that price risk on our own.
And I want to tell my listeners they can go to AmericanaInsurance.com and they can go in there and put in their own scenario on price and their APH yield history, and they can see what the trigger yield would be based on the price. So, example, I got here, if somebody has a 200 bushel average right now, I put in a price of $3.51 at a coverage level of 85%. Their trigger yield would be 192. So if they harvest 192 or under, as I sit with $3.51, please don't take this that this is set in stone or anything, listeners, but that would be where they would have a potential claim under anything under 192 bushel.
And that's all very important to know. If you've got an idea where your yields are at, then you can kind of figure out where price would trigger a loss as well. So,
right. And also, too, I want to let the listeners know that DiversifiedServices.com has got a harvest price tracking in there. So if you go to their website, it's price tracking over there on the side, and you can see where the prices are being set.
And we keep that updated in the afternoon grain market outlook letter every day too.
Right,
so.
Right. Yep, you do, and it's awesome. I love it. So the other topic that we got going on right now is what we call the ARC payments, or ARC payments, for the 2016 crop. Can you kind of just tell the listeners what that is and what are we looking at around here in our area?
Yeah, that's probably the best news we have to share today, if there is any, that it looks like because of prices being down over the last 12 months and because yields were not that much higher than the 5-year Olympic average last year on the county level, that we should be seeing some ARC payments made here sometime in October for most of the area counties. The final price on corn was at $3.36 for last year. So that was established last Friday. It was released from FSA, and that's the price they're going to use. Take that times last year's county yield. Take that times 86%, I believe,
yep,
and pair that to the 5-year trigger times 86%. So that's going to figure whether or not there would be an ARC payment. Now, every county is going to be different because every county's 5-year averages were different. Every county's yields were different this year. But we ran some stuff through the calculator. Looks like Freeborn County is going to be looking at roughly a $51 corn ARC payment. Faribault County around $18, Steele County around $23, and Mower County around $38 an acre. So they're all different,
right?
But it just depends on how the county yield was relative to the 5-year average.
That's actually higher than what I was expecting.
It's a little higher than most of us were looking for, and I think that's because that price has continued to work down into the end of the marketing year.
How about beans? Is there any payments on beans anywhere?
No payments in the Midwest. You'd have to look very hard to find a county that did. Again, our bean yields were so good a year ago that it offset the drop that we had in price.
Right, exactly. So, well, Rich, I appreciate your time, and oh man, this was good information. So if any of my listeners want to know more about your email, my telephone number here at my office at Americana Insurance Group is 507-377-2000, or you can email me at insights@americanainsurance.com, and our website again is americanainsurance.com. Thank you, Rich, and we appreciate your time and awesome presentation.
Well, thank you guys for having me.
You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.